But I think that silver could end up being in three digits. It could end up being several times higher than people anticipate that it ever has been. All of these things are in play to make it almost a mirror image from a concept standpoint of what palladium did in relationship to platinum and in relationship to market expectations.
Physical silver and gold in your hands, personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com. Hey everyone, this is Elijah K. Johnson with the Miles Franklin Market Update. And back with us today is David Smith, the Senior Analyst at themorganreport.com. David, thank you so much for joining us today.
Good to see you again.
Definitely. It's great to see you. And I'd first like to discuss the silver market because we've been seeing a bit of a pullback. We actually had silver dip below 26 this morning. What is your take on why silver seems to be continuing to fall?
I think there are just a lot of different actors out there that are all doing their own thing, and it's difficult to sort out the why. What Mr. Market tends to do is to give us the answers later. So if people are waiting for the answers before they act, I think that they're waiting too long. They should follow their plan regardless of what seems to be happening right now.
What do you mean they should continue their plan?
Hopefully all of our listeners, or most of them, already have some silver and some gold, physical, that's in, the hold in the hand type. And if they plan to get more, they should either be, if they have an allocation plan of buy it once a month or dollar cost averaging or however they do it, but they shouldn't be waiting for some clear signal, because I think the market are so unstable right now that the signals are going to be given at the same time the move takes place, and you just miss out if you wait. It doesn't mean go all in now, but it means follow what you've been doing in a rational manner and try to stay calmer than what the market participants are at any given time. I think that will really be helpful.
Definitely. I think it's important to really look back at the original reasons, you invest in precious metals, and those definitely have not changed, even if we see the prices fluctuate here and there. Now, you recently wrote an article about how silver could you said that silver could do a palladium. Now, with palladium, we've seen an incredible rise in the last few years. So you actually think that silver could do a similar thing, and that if you look at the fundamentals, they're very similar to what we saw in palladium prior to that run up. So can you expand on that?
Yes. For several years, palladium was at a deficit before anything happened. And silver is in the same thing. It's entering into the fourth year of a deficit. Also, it went 3 times higher than anyone, including myself, could have imagined, because it had never gone above about $1,100 before. And it went to almost $3,000, and then it stayed there. It's still around $2,400, a couple of years after it went up. And so this really will be a surprise to just about everybody. I think the relationship to platinum to palladium changed fundamentally for several years, and it may be about to reassert itself as platinum starts its new bull run, but we don't know that yet. But I think that silver could end up being in 3 digits. It could end up being several times higher than people anticipate that it ever has been, and its relationship to gold could change in terms of the silver-gold ratio. So all of these things are in play to make it almost a mirror image from a concept standpoint of what palladium did in relationship to platinum and in relationship to market expectations.
And that was quite a big run up. And you say that silver could get to triple digits. One of the differences between palladium and silver is that palladium isn't a monetary metal. Silver is. And inflation expectations, right, and the value of the dollar can impact silver and more so probably gold, but it can impact silver as well. And silver and gold can be, because they are monetary metals, kind of a warning sign. If they're going up a lot, oh, maybe the economy is not doing well. Maybe the dollar is not doing well. So if we see this huge, giant, move in silver, what does that signal for the dollar? Because with palladium, it didn't really matter, right? No one really cared that palladium rose significantly, and it didn't really impact the value of the dollar. Those aren't really connected that much, but with silver and gold, they are. So what kind of a world would we be living in if silver overtakes $100, $200, $300? what kind of a dollar would we have?
Okay, let me go back because you've posed several questions in a package. Let's unpack it a little bit. First of all, silver, as you mentioned, is not considered. It's a Janus metal. It's considered monetary and industrial, but historically, most of the demand for silver has come from industry. And what has caused changes, large changes in silver over time, has been when investors take more of an interest in it than they did in the past, and they tend to have that change happening on the margins. As David Morgan always said, change happens on the margins. And so the margins where people buy more investment silver is what causes it to rise sharply. And that's what's happened, several times in the past, but it's still mostly an industrial metal. However, and I could be wrong on this, but I believe that last year, 50% of the silver that was purchased was for monetary reasons. In other words, investment reasons. So if that's the case, about half and half of the silver went to industrial versus investment. And investment is set to become an even larger percentage than it was last year, I believe, in that regard. And so now we're seeing it as a monetary metal. And the thing is, the industrial users are going to have to come in scrambling down the line if we end up with the type of deficit that I think we're looking at over the next 2 or 3 years. So let's move forward to what you mentioned about what would it be like, what would things be like if silver was $100? This wouldn't be something like people say, I wouldn't want to live in $5,000 gold because we'd have a societal collapse. I don't think that would be the case. You could have $10,000 or $15,000 gold, and you wouldn't necessarily be having Mad Max. You would simply be having high inflation. You would have a very weak dollar, which leads to high inflation. And you would have more emphasis on the possibility of reinstating gold and perhaps silver as monetary metals, not necessarily in your pocket, but part of a group of metals that would be maybe supplant the dollar as a reserve currency, so to speak. So that we don't know what that world would look like, but I don't think it would necessarily be one that's hard to live in per se. But the problem is we have all sorts of political issues and divides, and we have economic deficits and things like this. So those things all influence the mix of which silver is a fish swimming in that sea. So to break out silver and say it's responsible for such and such, it's impossible to do, but it is a factor. And because people watch the price of silver like they do gold, not only you and I watch it, but the authorities do. And when they see it, quote, getting out of hand, they want to bring it back down so that people don't spend so much time looking at it and accumulating it. And all those things make for a very raucous environment. And how it plays out, we don't know, but it will be very volatile going forward for the next several years.
You mentioned how if we see silver explode and gold also, that might signal that, there's a lot of inflation, right? But that doesn't mean like we're in Mad Max, like you said. Where do you see the economy then at that point? Because some people predict that we're going to see high inflation, but then a weakened economy. So we're going to see stagflation, it's called, right? Do you see that happening, or do you see high inflation and a strong economy?
I see stagflation being the predominant theme. I remember the 70s when it was going on, and you had elements of the economy that were strong and elements that were weak. Systemically, the economy was kind of limping along in spite of some of the good stories, right? And also the inflation started picking up because of monetary policies and because of supply-demand issues. And all those into the mix created a situation where you could find any narrative you wanted, but the primary narrative was an economy that was not as robust as it should be, and monetary policy that was misguided, and investor interest that was taking place on an advancing basis because of these elements and because of the supply issues that arose around silver at that time. And they're arising now for different reasons, but I think they're going to be much, much more profound because of the new use cases that we have for silver with electric vehicles, EVs, solar energy, all this kind of thing, all the new uses of silver, and the fact that most of it each year is not able to be reclaimed. So you don't have a huge buildup of recycled silver like you do gold, which for the most part is still mostly around all that we've ever dug up.
Now, in your article, you also mentioned the gold-silver ratio and how really the ratio wouldn't have to fall that far to get new highs, new nominal highs for silver. Can you expand on that?
I wouldn't have believed fully the thesis that I developed even a few months ago. But as I thought about the palladium platinum experience, and I thought about the silver gold ratio, I started to see that the picture for silver could be bigger in terms of a price rise, at least a spike, and then a higher normal level price than most of us have really thought possible. Not just $100 silver, but multiples above that, at least for a period of time. And if you look at the silver gold ratio, it's tended to, for many years, it's tended to be essentially between 40 and 70. I know it goes up to 75 or 80, and it goes down to 30 or 20 or 15, like it did for one day in 1980. But the general rule, the broad consensus, it's almost like the Bollinger Bands. They show two standard deviations above or below an oscillating point, right? Well, you could think of 40 to 70 or 75 gold silver ratio to be like those Bollinger Bands. Most of the time, it's contained within that. So we could have a situation where silver goes up into three digits, and we believe the case for gold is still stronger, even if it's blunted a little bit by Bitcoin. And so instead of going to 15 or 20,000 gold, it might go to 10 or 12,000. But still, there's going to be a connection to silver within that ratio. And with silver moving on its own metrics, you could have a situation, which I proposed, well, let's say gold is 10,000, which is not an unreasonable expectation over the next few years. And then what would that mean for silver? Well, silver, if it stays within the ratio of 40 to 70, you could still have a very, very high silver price. And I did the math on it. I don't have it in front of me right now, but you could have silver at 250, and I believe it would still be within a 40 to 1 gold ratio, just as it's historically been. And you could have a spike to 600, which would still keep it within about a 20 to 1 ratio. So we wouldn't have to have something where some people say gold and silver could equal each other, which I don't think they ever would. I mean, I think that's probably bizarre or absurd. But 15 or 20 as a spike is not, it's historically precedented, not unprecedented. And so that's why I think the case for silver, I think that if people do not capture as much of the coming bull run in silver as investors as they are entitled to, it's because their picture may not be big enough. And of course, many of the people that have a big picture or don't have any picture will stay too long and give it all back when the market finally declines. And that's why the message of our book, that David Morgan and I co-authored, Second Chance, is when you get up to really stratospheric levels, you do something called the sacrifice throw portfolio, which we discussed, where you take most of your money out of the market, but keep a chunk of it in case you're wrong by maybe 200 or 300%, like people were, like I was in terms of palladium, in which case you're still in that market, but you don't have it all in so that you give it all back when the market tumbles, which it inevitably will do someday.
You mentioned how historically the gold silver ratio is around 40 to 80 to 1. Now, that's in about the last century or so. Some people mention how really, if we go back, if we consider thousands of years, it's more around the 15 to 1 ratio, somewhere around there. And if we look at the ratio that is coming out of the ground, it's about 8 to 1. So why do you think in the last 100 years, it's been so much higher, right? And I guess you're saying that is going to be kind of the new normal going forward, is that kind of century, 100 years ratio we've seen around 40 to 80 to 1.
I think it might end up being 20 to 40 instead of 40 to 80 because of the change, like Keith Neumeyer says, it's coming out of the ground at 8 to 1. Going back just a little bit, when you talked about historically, I think one of the reasons that 15 to 1 was prevalent for so long is because of the inability of people who mine silver for hundreds or even thousands of years to get it out of the ground in a way that we now are able to do through heap leaching and cyanide replacement and things like this. They can attack deposits that are maybe 50 or 100 or 150 grams per ton that are economically viable today, which they couldn't do many years ago. And they went after what you would call high grading, what was visible near the surface, what was before the invention of dynamite. You couldn't get down more than 50 or 60 feet. You'd run into the water table most of the time. And so a lot of the deposits that we mine today, You can dewater a mine, plus you have dynamite, and you go down and you work it that way. So we have all these ways to capture more silver that we didn't have then. So I would take something between the 15 to 1 and the 100 to 1 that we've seen. I know it went to 125 briefly, but let's say 50 to 100. And I think when all is said and done, that the new norm for silver, if the use cases play out like we've all been talking about with EV vehicles and all sorts of medicinal uses and whatnot, I think the new ratio could be 20 to 40 or 30 to 40 rather than 40 to 80. And I can't prove that, but I think a case can be made for it. At the very least, it will be a ratio that is more in favor of silver to gold than it has been in the last several decades.
And one other topic I'd like to discuss today is food inflation around the world. You say that globally, that's what we're seeing, a lot of inflation. And we talked about inflation earlier in this interview, but specifically in food. And you think that that is actually going to be bullish for silver. Can you expand on that?
Inflationary expectations on the face of it are always bullish for the precious metals. What's happening now is that the government is understating inflation in general. It serves them their purpose to do that. They don't have to pay out as much in Social Security benefits and a lot of other things. But also, the Federal Reserve itself has admitted that the most accurate indicator of coming inflation is food prices. And so most people don't realize that, and they don't realize that the Fed has, even though they're not acting on this understanding, they're still touting low inflation, 1.5% to 2%. But they know in their heart of hearts, because they've stated this, if they look at the food inflation, that it's going it's not parabolic yet, but it's broken out. There's a chart that was put out. I've seen a couple of different iterations of it, where food inflation has broken out of like a downtrend that has lasted since 2011 or even earlier in a very big way. It isn't just poking through that trend line, it's now sharply higher. And if you look at prices of food in Asia, in South America, in European areas, because they're experiencing weather difficulties, and in Indonesia, the staples that people rely on are up 20, 30, 40% on an annualized basis. Grains annualized are now rising at a 20% annualized basis. And so food inflation is going to, once people understand that, they're going to say, well, this is one indication that inflation is a lot higher than I've been told. And I know that gold and silver will help protect some of my wealth from that degradation effects of that.
Yeah, so you said that food inflation is really the greatest indicator of where inflation will be in the future. So what kind of food inflation are we seeing right now? And what kind of inflation, therefore, do you see in the near future?
Okay, we're seeing inflation in all the staples. You look at the grains, you look at rice. There's a locust pestilence that's going on in East Africa, and now it's spread to Saudi Arabia. Some of the descriptions I've seen are almost impossible to visualize, where whole areas of a town are a black cloud from the ground to 20 feet high. I mean, and you can't even see through it. You know, they eat everything that they can find, and that kind of a pestilence we haven't seen for many, many years, and we're seeing it in areas of the world where we didn't see it before. That's just one indicator of the problems along with declining yields due to the overuse of pesticides and things like that. So the whole metric of food acquisition is starting to get out of kilter. When people realize that inflation is going on, of which food is one aspect, just one aspect, they move toward precious metals, and that's what's going to happen. It won't have to be like, oh, I see Rice Krispies have gone up, I'm going to buy silver. It isn't like that. It's like everything I see in the grocery store is going up. My medical costs are going up. I'm paying $40,000 more for a house this year than I did last year. Everywhere I look, things are going up, even though the Fed says they're not. And silver is the canary in the mine, and the metals are being accumulated because other people, smarter than me apparently, are seeing that, and they're collecting silver. And they realize that there's not that much more of it out there, and they're going to be competing with industrial uses for what they want for investment uses.
All right. Well, David Smith, we really appreciate your time today. Before we let you go, if people are interested in hearing more of these interviews, definitely hit the subscribe button and the bell icon so you'll be notified when they're released. And yeah, where can people find you online, David? And any last thoughts you'd like to add?
I write for the Morgan Report each month with David Morgan. I write a monthly column for Money Metals. I do an invitation column several times a year for the Prospector News. I have one coming out probably in the next couple of weeks ago in their bi-monthly issue. So, and they can also write at support@themorganreport.com if they have some particular question.
All right. Once again, David, thank you so much for your time today, and God bless.
Same to you. Have a good day, Elijah.
Physical silver and gold in your hands. Personal service, competitive prices, and zero complaints. That's Miles Franklin. Call us at 1-800-822-8080 or email us at info@milesfranklin.com.